Now I am going to discuss how to adjust EPF and ETF. For EPF, both employee and employer give their contribution. Based on the EPF Act, percentage contribution of employee 8%, contribution of employer 12%. For ETF, only employer give their contribution. Based on the ETF Act, percentage 3%. Then EPF and ETF, employee and employer contribution should be calculated based on the gross salary. Therefore, assume if gross salary of employees of the business is 500,000, then you can calculate value. Contribution of employee 8% for EPF, so therefore gross salary 500,000 into 8% equal 40,000. And contribution of employer for EPF based on gross salary 500,000 into 12% equals 60,000. And ETF also based on the gross salary 500,000 into 3% equal 15,000. Therefore, first one you know how to calculate contribution of employer and employee. It should be calculated based on the gross salary of the employees of the business. Right, then when business going to pay salary to the employees, net salary should be paid. Net salary means after deducting contribution of employee from gross salary. Gross salary 500,000, then should be deduct EPF contribution of employee. Then balance amount, that is net salary, that is a value should be paid to the employee as a salary. Therefore, you know how to record in the ledger accounts. When we are going to record in the ledger accounts, there are 4 steps should be applied. First one, net salary should be recorded. Second one, contribution of employee for EPF should be recorded. Third one, contribution of employer for EPF should be recorded. Fourth one, ETF contribution of employer should be recorded. When we are going to record in the ledger accounts, there are 6 ledger accounts should be prepared. 6 ledger accounts. First one, net salary should be paid in cash. Therefore, cash accounts and salary accounts. After that, EPF expense accounts and EPF payable accounts. ETF expense accounts, ETF payable accounts. Then first steps, net salary should be paid with cash to the employee as a salary. Therefore, cash account credit, salary account debit. Second one, contribution of employee for EPF should be recorded. That is also part of salary. Therefore, salary account debit, EPF payable account credit, EPF payable. Third step, contribution of employer for EPF should be recorded. That is not part of salary, cannot be deducted from salary. Therefore, separate expense, EPF expense account debit, EPF payable account credit. Then fourth one, ETF contribution of employer should be recorded. ETF contribution of employer. Fourth steps. That is also another expense, cannot be deducted from salary. Separate expense. Therefore, ETF expense account debit, ETF payable account credit. Now there are 3 expenses: salary expense, EPF expense, ETF expense. All the expense accounts should be profit and loss. Debit side increase, take the credit side difference value as a profit and loss. This one also as a profit and loss. Therefore, there are 3 employee related expense. When we are going to prepare the financial statement, those are should be included under administration expense. And EPF payable, that is a liability. EPF payable as well as ETF payable, those are liability accounts. Credit side increase, take the debit side, difference value should be carried down. Those are liability. When we are going to prepare the financial statement, those are should be included under current liability. That is the way we are going to record EPF and ETF. Try to get idea. This is the summary. For EPF, both employee and employer give their contribution. For ETF, only employer give their contribution. Value should be calculated based on the gross salary of the employees as a salary. Net salary should be paid. Net salary can be calculated gross salary minus EPF contribution of employee. Then there are 4 steps should be applied. 6 ledger accounts should be prepared. There are 3 employee related expense, 2 liabilities.